welcome to the Mortgage Rate Weekly Update for the week of December 25th, 2017. Hello, I'm John Thomas with Prime Residential Mortgage to give you an update. Hey, Merry Christmas, Happy Holidays. Looking forward to the new year. Mortgage rates last week, though, did spike higher. If you take a look at the bond chart on the screen, you can see mortgage rates failed to break through a tough ceiling of resistance. It's been a tough trading channel for the last couple of weeks. So they sold off. But there's been a floor of support that's been holding, but that actually, they broke through that last week, and mortgage bonds fell even lower down to the next level of support. That caused mortgage interest rates to spike higher. Now, we did find a floor of support and did do a slight bounce off that support, as you can see on Friday. So what we're looking for is mortgage bonds to continue to rally off this floor of support. So we're going to recommend you carefully float your mortgage interest rate to start the week. Now, if mortgage bonds break through that floor of support, they have a long way to fall, which means mortgage interest rates could move even higher. So you're going to have to watch. You can carefully float, but if mortgage bonds break below that floor of support, we're going to see interest rates move even higher, and we quickly switch to a locking stance. Now, if we dig into the economic news, big news last week is the United States Congress passed tax reform bill termed the Tax Cuts and Jobs Act, which takes effect January 1st, 2018. It did go to the president's desk. He did sign it into law. That sent the major stocks index higher, which pulled some money out of the bond market. That was part of the problem why bonds sold off and mortgage rates did move higher. So if you take a look at the screen, you can see a quick side-by-side comparison of the major issues in the tax bills. There was the House version, the Senate version, and the final bill. So the tax cuts that are in the bill are not permanent. The mortgage interest deduction was curbed from $1 million down to $750,000 worth of interest. That will not affect most homeowners because most people don't have a loan that has more than $750,000 of interest to deduct. So that only affects rich people anyway. Deduction for pass-through income was in the final bill. Delayed cuts for corporate rates was not in the final bill, so there will not be a delay in the cut to the corporate tax rate. It does drop most state local tax deductions from the federal tax bill. There's fewer individual brackets did not make it through. It did repeal the alternative minimum tax that was affecting a lot of higher end middle class people. It does increase the tax credit, which is big, that is huge. It does maintain the medical expense deduction. It raises the standard deduction. It doubled, which is that is crazy. That's going to help a lot of low to middle class families, because they're going to have a higher deduction, simplify their tax return. They will only have to do this, want to do the standard deduction, can do the easy form. It repeals the estate tax. That did not happen. That did not make it in the final bill. It did repeal the health care mandate, so you will not be have an issue if you do not carry health insurance. And then it does not tax the graduate income. Those are the biggest issues that were in the news, so you can take a look at that. Then the other news last week was gross domestic product. The final reading for Q3 of 2017 came out at 3.2%, up from 3.1% from the second quarter reading. Now, GDP is a measure of the monetary value of the goods and services produced by a country. It's considered the broadest measure of a country's economic activity. So the increase in GDP for the third quarter was spurred by robust business spending. We're looking for a strong GDP going into 2018, especially with the tax cuts that just passed. Then we saw a weak initial jobs claim come out on Thursday. They jumped 20,000 claims to 245,000 claims for the week. That's still a very good number, well below the 300,000 threshold. And this will also be the sample week used in the the December jobs report. So we're looking for a very strong jobs report with this very low number of jobless claims. Then we saw in housing news, new home sales for September 2017 soared higher to 733,000 units. That's an increase of 17.5% from October and a 10-year high for new home sales. So new home construction is taking off. Demand for new homes is very high across the country, which helped boost new home sales. November had the biggest monthly gains in new home sales since 1992. And new home sales were up a whopping 27% for November of 2016. So new home construction is just on a tear. Housing starts for November 2017 rose 3.3% from October to 1.297 million units. Housing starts measures the number of homes that new home builders have started construction on. Now, building permits for November fell 1.4% to 1.298 million units. Now that measures the number of permits builders have applied for to build new homes they haven't started construction on, but that's a sign of future construction. So down slightly, but that's what we expect in the winter months. Then we saw existing home sales for November 2017. It also surged higher to an annual rate of 5.81 million units. That's an increase of 5.6% over October 2017. Existing home sales for November are up 3.8% from November of 2016. And existing home sales hit an 11-year high in November, attributed to faster economic growth, record high stock markets, and a very strong labor market. Have home buyers feeling much better about the economy, so they're out there buying homes. Now, inventory levels dropped nearly 10% from last year to a 3.4 month supply nationally, which is well below the normal inventory, which is 6 months supply. So low inventory is going to push the median home price up because supply and demand. The median home price was up 5.8% from November of last year. So very strong new construction, very strong existing home resales. We're looking at a strong housing market going into 2018. So if you have not bought a home, now is a great time to buy because you will see a price appreciation on your investment over the year. Then in the local news, the next first-time homebuyer seminar is Wednesday, January 10th. That is in Wilmington, Delaware, at the Independence Mall off of Concord Pike from 6 p.m. to 8 p.m. And then the next one in Newark, Delaware is Saturday, January 20th from 10 a.m. to noon, and that is at the Christiana Hilton Hotel in Newark, Delaware. You can register for either one of those events by giving us a call in the office at 302-703-0727 or online, www.delawarehomebuyerseminar.com. Look forward to seeing you guys next week.